And our special guest host this hour, social capital founder and Virgin. People have been calling it Virgin Galactica, which I think is a good name because it merges all the different cultural versions.
Galactic.
Yeah, Chairman Chamath Palihapitiya, it's good to have you here.
It's great to see you.
You got more things going on. This is just one of them, but this is, compared to the last time you were on, it's like, why are you doing this pie in the sky type stuff? Next thing you know, the stock's worth like $8 billion or something for a market cap. It's a real thing.
It's a real thing. It was a real thing when we did it.
We were talking off camera about, Chamath has to wait like everyone else to go up. And I said, you can put me on the waiting list. Can I be like 10 millionth person
well, you said
to
millionth go? Before, I'll take millionth.
Anyway, I want to see it. Film it when you go. Send it to IMAX, and I'm going to go in and experience it. Like right over here at the New Jersey Science Center is close enough for me. U.S. equity futures at this hour, I guess I'm going to win, up 77 points. Back up. We were just unchanged or down again. It's been all over the map this morning. The S&P indicated up about 12. NASDAQ rebounding a little bit this morning, up 32. Maybe the most important thing to watch is that 10-year. And earlier we were down under 135, and now we're 137. As that goes up, it's kind of a fear gauge for, believe it or not, for the pandemic and the coronavirus. So the more the yield goes down to all-time lows, the more you worry about global growth slowing because of a possible pandemic.
Okay, let's show you how we got here right now. Markets began the day yesterday in the green. Stocks were positive out of the gate, if you recall, at 9:30, with the Dow up nearly 200 points at one time. Then fortunes changed and indexes fell throughout the day, with investors nervous about the coronavirus cases in new countries. And then the CDC coming out and saying the global spread of the illness, suggesting a pandemic was likely and that everybody should get prepared. The Dow then ended down 879 points. Add that to Monday's 1,000-point, we'll call it a rout now. And we've now seen the Dow's biggest two-day point drop ever, with $1.7 trillion in market cap, just wiped straight off the S&P 500. That index down now more than 6% for the week. Nearly two-thirds of stocks in the S&P are now in correction territory. The tech sector now in correction territory as well, down more than 10% in just the last week. And, of course, bond yields, as Joe was mentioning, continuing their own slide, the 10-year note hitting an all-time low of just 1.3%. The 30-year bond hitting an all-time low under 1.8%. That's more than a full percentage point lower than last Friday's close. And we are looking up at the moment, but we'll see where things are.
For Chamath, the most recent stuff is the Virgin Galactic, the report on earnings and where things are headed. But we got to and we all have feelings about coronavirus, and you've got a lot of investments all over the world in a lot of different areas. So we got to ask you about our guest host is Chamath Palihapitiya, founder and CEO of Social Capital, also chairman of Virgin Galactic. But Social Capital has tentacles in a lot of different places, and this is on everyone's mind, obviously, when the market goes down almost 2,000 points in 2 days. Yeah. So what do you make of it?
I think that we are at a really important inflection point. The thing that we don't know, quite honestly, is what is the real denominator in China. Like, this is the very complicated thing that nobody knows. We've been told it's in the tens of thousands, but the reality is this number could be in the hundreds of thousands and it could be in the millions. And then you have to account for all the people that are latently carrying coronavirus, not just within China, but all over the world. So if you ask me, the deaths are hard to hide. So there's been several thousand of those. But the denominator probably tells me that if it's in the hundreds of thousands or millions, then what we're really dealing with is something that's akin to a flu.
Right.
Now, that's much more of a tractable thing because we know how to deal with flus.
Although, what if it's 2 to 5 times the mortality rate, as we've had some people who have speculated?
Well, this is why I think it's really important to understand what the denominator is. If the denominator is high enough, it's the flu. If the denominator is as low as it is, but then the viral spread and the viral coefficient is as fast as we're being told, this is a really serious problem.
It's too late, right?
And it's not a question of too late, but I mean, it's going to shut down not just how, countries work, cities work, but borders, and it's going to be something that we haven't really seen in a very long time. And that's going to be the only thing that a responsible government should do to react to this.
So as a responsible investor, what do you do?
Well, it's a really complicated question. So, the problem is I have billions of dollars of private company equity, I can't do anything about it. I'm just kind of holding,
billions of dollars of. No wonder you dress like that. You're you billions of dollars of equity.
It's true. Well, I mean,
so
it's
awesome.
True.
I know.
But there's nothing I can do about that. So how do I hedge?
How do you hedge? How would you hedge? You have some public market exposure.
I have a fair amount of concentrated public market exposure, and increasingly I'm trying to find opportunities where I can just short broad-based indices and just get some hopefully relief. And then the rest of it is I come back and I ask myself, as long as I can re-underwrite the things that I own, just remember that I'm not owning stocks, kind of the Buffett thing. I own companies. And as long as I can maintain some semblance of normalcy, this will take 8 to 9 months, I think, to roll its way through the markets and for the markets to re-rate. And I'm probably at the tail end of this a net buyer. And right now, if I can just, manage my own psychology for the next 5 or 6 months by not losing as much as I think I'm going to lose, I think it'll feel like a win.
It means don't be leveraged, right?
I've never run. I mean, this is the thing, by the way. Can I just say something? I've been meeting a lot of great folks the last 3 days here. Every time I come to New York, I meet some of the best hedge funds. And one of the things that really struck out to me this time around is how levered everybody is. I mean, folks are running 5, 6, 7, 8, 9 turns. If they're actually running something that's more liquid, like a typical macro strategy, they're running 12, 13, 14, 15 times levered.
That sounds like a problem.
I have never run an iota of leverage. And I've always felt like I've been on the wrong side when I see people printing these enormous gains. And I've thought to myself, why am I being so conservative? But in moments like this, I feel really, really calm.
Chamath, you're the first person that's kind of said that on this set, that there are a lot of hedge funds that are super levered up out there, and that caught you off guard. That, to me, sounds like a potential problem when you see activity like we've seen the last couple of days.
I mean, this is a much bigger problem because I think just the hedge fund industry has a completely, misaligned upside-down business model. So they try to have very, very small exposures, but then they lever the whole thing up to make the whole thing work. They're not necessarily hedged to begin with. There's a ton of correlation. And when things like this happen and everything re-rates and you're, running 5, 6, 7, 8 times, then the selling gets exacerbated. So the thing that we haven't seen is what if that happens? Because I think it's fair to say that, you'll go risk off and people will take money out of the market. That'll represent, the first maybe 800 points in the Dow or the first 1,000 points in the Dow. But then if this thing moves another 2,000 or 3,000 points, it's just forced sellers.
Okay, I want to talk space because it's so exciting.
By the way, we're just getting news.
Space.
Hold on,
yeah.
we're getting news that President Trump is going to hold a news conference
about
coronavirus at 6 p.m. this evening.
I did ask him about that
great.
before it was a glimmer in our eyes in Davos, and this was my first question to him.
Right.
And the same answer
And I know
he
he has not
yesterday.
been worried, and he sent Larry Kudlow out to say he's not worried. Obviously, the CDC has a very different view of that, but a lot of people are going to be focused on what the president has to say.
So, Chamath, you've taken companies from, again, a glimmer in someone's eyes all the way to where they're major companies. So you know about how things get valued. Is space ahead of is Virgin ahead of itself? Have you been surprised at what's happened based on the fundamentals and where the market cap is right now? Is it a story stock in your view?
Well, can I take a step back and actually just give you the setup? So,
sure.
And I think this setup it doesn't just apply to Virgin, but it also applies to Tesla. And those two things are actually the most similar stories. And the setup goes along the following lines. First, let's look at the fixed income markets. For the last 10 years, everything that has looked like a nail has been dealt with the following hammer, which is print money, cut rates. The Patriots win the Super Bowl, print money, cut rates. Trump tweets, print money, cut rates. Coronavirus, print money, cut rates. And while that's happened, rates have gone to zero, and there's trillions of excess capacity just sloshing around in the fixed income side. Then on the equity side, the number of companies you can invest in has shrank by 1/3. There's really no growth outside of multiple expansion, and there's no growth outside of buybacks. So everybody crowds into the 5 technology companies, right? The FANG stocks, which represent 20% of the market cap of the S&P. So when you put those two things together, there's a setup where there's no real growth, there's no unique stories, and there's nothing that can give you long-term outlook. So then when a company comes along that has a unique narrative and is trying to do something that is differentiated, high margin, and could theoretically grow for 10 years where there's an enormous amount of consumer demand, these things get repriced in ways that are non-traditional.
Sounds to me like you're saying, yes, it's a story stock, but that doesn't mean that it's not going to turn into something huge.
I really believe in Virgin. I mean, I didn't invest the amount of money that I did or put myself on the line to do this deal because I didn't.
So when's the
believe it.
first flight going to be? It's not going to be June anymore, right?
Well, the goal is to fly Richard on a commercial flight this year.
This year?
Yeah.
No longer June.
Yeah, I think the point is that, setting an arbitrary date for something like spaceflight is not the right thing to do. I think you want to move forward in a plan, not move backwards from a date, and give that team, who are, the best scientists from NASA, JPL, give them the chance and the opportunity to just build an exceptionally beautiful experience. The thing for you, and you just said it, is we want you to not say you want to be the millionth customer, that you want to be the 10,000th customer or the 1,000th customer.
What'd you say, Sorkin? What you said 10,000th customer, I think.
I said a multiple of
1,000.
No, of 8,000, because you had said we
said, yeah, okay, so you're the 8,000.
But by the way, guys, and what George said yesterday is they're making amazing progress. Working through the FAA, working through the technical capabilities, flying the machines back down to New Mexico. And then on top of that, all this demand keeps piling up, 124% increase in the number of people that want to buy tickets. We've now started to accept pre-reservations.
Right.
If those 8,000 people, just those 8,000 people, doesn't seem like a lot, but when you think that the price could be around 300 grand, that's 2.4 billion of pipeline.
Can I ask you just a real quick question? Is there an insurance program?
Yeah.
For individuals?
I believe there will be, yeah.
So if something tragic were to happen, do you know what the payout would be relative to a regular airline? I'm just curious because I think that's actually, I don't know if people think about it like that.
I don't know, but I do know that there will be a really robust insurance.
Very quickly, Mike Santoli brings up a good question, too. Just point out that when you bought into the SPAC, it was at half the valuation of like $1.5 billion. Now it's a lot higher. Did you take Richard Branson to the cleaners? Or is this current valuation overdone, or did things just change that drastically?
No, neither. I think Richard and I found a way for us to do a deal. You have to remember, we put $800 million into the business. Between secondary and primary. So, there aren't a lot of people that are walking around with $800 million burning a hole in their pocket. So, we found a fair valuation for him and for me. I think the other thing, though, Becky, that happened is when you take these things that I just talked about, the dearth of opportunities and the fact that there's so much money on the sidelines, and then apply it to a unique story, I think what happened in the fall was people finally woke up to Tesla, and then people started to say, what else looks very similar to this? You have to remember, people missed out on a 75x on Tesla over the last decade. I didn't. I was a proponent of the Tesla converts. I've been shredded on Twitter for years and years being a supporter of Elon in that company. We turned out to be right. The shorts turned out to be wrong. And I feel just as emotionally invested and intellectually invested in Virgin. Leon, what do you say to the 50 million plus people that believe that if you read the policies and take the label of socialism aside, he really looks more like a social democrat that's akin to a politician in the Nordic countries than he does to, Fidel Castro 2.0?
I don't know. That's not how Bernie Sanders sounds to me. My main hang-up has been all along the constant attacking of wealthy people, the villainizing of the billionaire class. Now, I luckily got into the billionaire class, but I'm one of these guys. I'm going to give it all away. I don't care much about money. Okay, I don't get it. I look at a Mike Bloomberg, the way he's treated in these debates, whether he's attacked. Mike Bloomberg knew unemployment. He lost out in a power struggle when he was in his mid-30s. He had this vision of building a machine. He built a ubiquitous machine that you need if you're in the investment business. He's built a $60 billion net worth. He gave away $9 billion to charity on his own well before he became involved in a big political way. He did a fabulous job as mayor of New York, in the biggest city in the world, and they're attacking him. And he had a great line in the last debate, not last night, where he said, I'm the only guy on this platform that built a business. And they all looked at each other blank. Bernie Sanders has not worked a day in his life.
Yeah, but Leon, I just think at the end of the day, look, I've been equally blessed as you, so I'm in the same fortunate position you're in. But at the end of the day, if the worst thing that happens is people name call us a little bit and call us billionaires and detached, that's not the worst thing in the world if it allows us to wake up to the reality that a lot of people haven't been able to participate in what has really been, an equity market expansion where, folks like you and I who can be, long equities in a massive way, levered up, access to certain products, can do well to a degree that everybody else can't. I think what people are saying is, let's just acknowledge that that's happened, and it's not a name calling. We shouldn't just be so sensitive.
It goes beyond that. It goes beyond that. I'm a believer in the progressive income tax structure. I believe rich people should pay more. Okay, what we have to do as a nation is agree upon what should the maximum marginal tax rate be on wealthy people. That will define the revenue yield to the government, and we have to size the government to that revenue yield. Now, I'm prepared to work 6 months a year for the government and 6 months for myself. That's a 50% marginal tax rate. Unfortunately, depending on what state you live in, you're already past there between state and federal income taxes. And it gets to be confiscatory. There's a great comment that I read recently by Thomas Sowell. He said, since this is an era when many people are concerned about fairness and social justice, what is your fair share of what someone else has worked for? Okay, I'm willing to pay a 50% marginal tax. I have no problem with that. Okay, I just think that the dialogue is destructive. It's not inclusive. So I'll give you a perfect example. I spoke at the Delivering Alpha conference a number of months ago. Nothing whatsoever was said about politics. The moderator, Scott Wapner, asked me a question after I gave my formal presentation and said, what do I think the market would do if Elizabeth Warren was elected president? And I said it would go down 25%. I think you had a different view. I've heard you previously. Okay, and the next day she tweets, Leon, I'm only looking for 2%. Give others a chance at the American dream. She has no clue about anything about me. Okay, I've given away $700 million in the last 3 years to charity.
I sent 500
kids. Let me finish, please, if I may. I sent 500 kids to college in Newark, New Jersey. I pay their tuition. Okay, and basically, but I decided to take the high road. Okay, Michelle Obama said, when they go low, we go high. I send her a rather well-written letter, very respectful, very conciliatory, with a closing paragraph about all of us have to work together to deal with the issues. But there are issues. I don't deny that. There are issues. My approach to resolving the issues is through education and hopefully faster economic growth. What does she do? She puts out a bullshit, comment, insider trader, and owns stock in Navient. Very constructive. The Wall Street Journal wrote an editorial page comment that day. She said that, said Mr. Koopman won the case. What is she accusing him of? But it was nothing constructive. She was a politician in the worst sense of the word. Okay, and we need people that see the issues. I like the fact that in certain respects Mike Bloomberg was a Republican, in certain respects he's a Democrat. He's voting issues. Okay, we have to avoid the labels. We have to work together in a cooperative manner. And all this income differentiation has been really the result of monetary policy.
Leon, I want to get a response from Chamath, but I want to add one other piece to it. And I'll speak not for you, but I'll add another element to this, which is assuming that a Bernie Sanders and Elizabeth Warren were put into office, and I know that you're okay with maybe some of the criticism that the vocal criticism that they have about the billionaire class, but the question is, from a policy perspective, are you okay or encouraging of that policy? And to the extent that you can appoint the head of the Department of Justice and say, please go look at these individuals. If you could say, if you can appoint the head of the SEC who is going to maybe look into various companies in a more aggressive way. I'm not saying they shouldn't. I'm just raising the issues. Even if you have a completely divided Congress, how you see this playing itself out.
It doesn't matter who gets elected, in my opinion.
It doesn't.
I have sort of generally lost faith in the power and the impact of the presidency in domestic policy for years. It is generally been the case that the President of the United States is given one hall pass to do one meaningful piece of legislation in the first 2 years of their term, at which point the American population either flips the House or flips the Senate and creates stasis. And it has happened relatively predictably now, and I think that it will continue to happen. And so the question is, what do we think is the most likely thing to happen? When Trump came into office, the only thing that they were able to get done in which Republicans were able to corral the wagons was tax cuts and tax change. but everything else basically just came to a grinding halt. Obama was the same thing.
I don't agree with that. I think that when Trump, I'm not a Trump fan, okay, but I believe the man deserves a certain amount of credit for what has gone on. You know, I don't like his style. And so at the end of the day, you have to decide you vote your values or you vote your pocketbook. I'm at a stage in my life where I want to vote my values, and my values tell me that it is wrong to call Mitt Romney a jackass. It is wrong to tell Rex Tillerson he's dumb as a rock. It's wrong to denigrate John McCain, who was a true war hero. It's wrong, basically, to say John Dingell is looking up and not down, even though I had totally different political views to him. Okay, but the president deserves credit. Okay, when he came in, it was like they took the foot off to throw the economy. The economy and the stock market is at a record high. Unemployment for minorities is at a record low. Overall employment in the economy is at a record high. We've opened up a long overdue constructive dialogue on trade with China. We focus attention on illegal immigration. All this is good stuff. The problem with it is his deportment. And I analogize him to Ronald Reagan. Ronald Reagan was a very beloved president. Okay, when Ronald Reagan ran for office, he said, I had a three-pronged program. Prong one, get the government off the backs of the people. I'm going to do that by reducing taxes and regulation. Ditto for Trump. He said, I'm going to restore the lost prestige of the United States after the Carter years. I'm going to do that by rebuilding our defense. Ditto for Trump.
Let's get back to the crux of the matter is, even if you soft soap Bernie Sanders' policies and say it's a Nordic-style democratic socialism, it would still reverse a lot of these positive things that has happened. It's that simple. $60 trillion on a Green New Deal or $50 trillion on Medicare for all is not just having a conversation about people that haven't participated.
It's a lot of free stuff. The young people,
let's be practical. They're not going to be able to get these things done.
Talking about that even these things
we don't need a gridlock in government. We don't need gridlock in government.
To not understand economics anymore, to not understand that capitalism got us where we are. So you can have these great, high-minded, Nordic, social democratic conversations, but it's a dangerous place you're trying to take us. You're saying we can't get there, so just have the conversation. But why not acknowledge that it's capitalism and it's free markets that got us where we are?
Last time I checked, we're allowed to have a diversity of opinions.
Okay,
I think you're seeing an entire cohort of young people.
You got Bernie Sanders leading the pack in the Democratic field, and that is a problem for Democrats.
Again, look,
if you think that's okay, that he's going to get the nomination, that's fine. I think you've dug
I take a lot of energy in learning about what's happening. I take a lot of energy in reframing.
We're stuck with Bernie versus Trump. That could be the end result of all this.
Let me do this. You guys wanted to talk about the market.
Go ahead, Leon. We weren't going to talk politics.
Basically, as I said at the outset,
socialism is dangerous.
When Bob first got the job, people thought of him, dare I say, as a suit. They did not think of him as some kind of creative genius. They thought of him as a business person. To some degree, Chapek has that same kind of reputation. How important do you think it is for a CEO of a media company or media entertainment company in this day and age to be both the numbers business guy, if you will, and also sort of a left brain, right brain situation?
Well, what's particularly interesting in this transition is Bob Iger saying he's going to spend the next year and a half or however long it is being an executive chairman focused mainly on creative. Because as you say, he came in as not as the creative person. He came in as a business suit, so to speak, in the Hollywood jargon. I think Bob Iger has great taste. He has great fingertip feel, for both television and stars. But he's not one of these Hollywood people who is known as, let me be the creative product person. So it'll be interesting to see that he decided to cast himself in that role for the next year and a half.
All right. Chamath, you're making faces. What are you thinking?
Bezos has this term called narrative fallacy, which is after something works, you look backwards and you kind of invent whatever you want to say to make yourself seem amazing. That's a business that I think, frankly, more than anything else, has proved the value of really good M&A by using a highly levered security. That's what they've done. Because when you look at Pixar was moderately successful.
Marvel.
the stock was just kind of flat for 3 years. Once they tagged Marvel, then it was a game changer.
Right.
Yeah.
And so that single acquisition was, I think, the transformational event. And so in my mind, what it proves was the value of M&A. And so if you have a balance sheet like Disney, I would kind of think, why not put somebody who has an eye more towards a transactional impetus than an operational focus? And so
you give him credit for I mean, people said that's way too much to pay for Pixar. I mean, you have to give Iger credit for doing the M&A deals that you're talking about.
But he's saying he was an
he's
a deal guy, not a creative guy.
He's an incredibly successful M&A guy, and now wants everybody wants to pretend they're Steven Spielberg, and I think it betrays what he's really good at.
But that's brilliant. But if the new guy's an operations guy, you built up this huge company. Now you need somebody who knows how to run it well.
Well,
maybe
I actually
that's
think
the next step.
Disney,
or do you think it's?
No, I think Disney is such an excellent, exceptional example of what an old line industry company needs to do, which is you need to find where the puck is going and then aggressively acquire
But
yourself.
not do it organically.
You can't do it organically. It's not possible. Even Facebook can't do it organically. They need to acquire. So if Facebook can't do it, if Google can't do it, and they're acquiring, why do you think...
But if you listen to the words of Bob Iger yesterday, he said, look, we have now all of our assets in place. In fact, I thought the suggestion that he was making was actually...
The difficulty...
No more M&A.
No, the difficulty is now what they're finding, and this was Netflix that's going to do this, is Netflix has transformed the cord-cutting streaming business into a consumer surplus business. It's going to basically take margins to zero. And as they do that and as they fight for subscribers, the only way to survive for somebody like Disney is to acquire and to bolt on acquisitions over and over and over again. So I think you probably need someone who has the wherewithal, the risk tolerance, and the vision to take that risk.
Our guest host this hour, Chamath Palihapitiya, Virgin Galactic Chairman and Social Capital CEO. I've got a couple quick questions for you. One, this was a SPAC that you did.
Yeah.
Do you believe, and we talked about this, you used to talk about this as being the IPO 2.0.
Yeah.
Do you think this is actually changing the game in terms of how companies are going to go public in the future?
Yeah, completely. I think that what we showed was that there's a lot of high growth companies in Silicon Valley and increasingly as well in Europe and in China, where this is actually a much better way to go public. It's better than the traditional IPO, and it's better than a direct listing.
Even though it looks like Mr. Branson may have given you a lot for this.
I think that what you're going to see is like actually the price action has been nothing but positive. Like what you don't want to have happen is a complete mispricing on the front end where people are locked up, volatility moves, and the people that make the money are the people that entered in at the point of the IPO because of relationship with banks and otherwise. We unlocked everybody from day one, and we allowed everybody to participate up to, you know, $42 a share or wherever it went to.
Let me ask a couple other questions. You've talked about Tesla briefly, but not really, which is how high do you think it can go? Since I know you're long.
Yeah, I mean, I bought these converts a long time ago. It was kind of like my big pick at Sohn 3 years ago. I really believe in this business because what they're now moving into is beyond cars and transportation, but sustainability. And I think that, you know, strip away whether you believe in climate change or not, it doesn't matter. What they offer is a set of products that I think will be increasingly in demand.
How much are your convertibles worth? What's the stake you have right now?
It's good. It's a large number.
Are you surprised to see the stock run so quickly, so fast this year?
Yeah, you know, that's why I actually started to put together a framework of like what is actually happening. And this is what I said before. With rates at zero, with trillions of dollars of printed money, with no investable equities, companies that are unique and N of one, Tesla, Virgin Galactic, are going to have a bid. And then if you do something that really captures consumer imagination, retail is now going to be a huge part of it.
ESG, real or marketing?
It's a complete fraud.
Complete fraud.
It's so ridiculous. Governance has been addressed. That's useful. But, you know, this idea that you're going to get a stamp that says, oh, listen, like, you know, my supplier, you know, I've offset their carbon credits and now I understand my... It's a joke. It's jargon. And I think what people are doing right now is using it as a way to, you know, for example, like if you can paint yourself as ESG, in Europe, you can essentially borrow money from the ECB at negative rates.
I'm going to come over and give you a massage now.
It's a carry trade.
He doesn't want you touching him. Coronavirus.
Go Chamath. Go Chamath.
Hold on. But I personally believe in climate change. I think we need to do something. And so the problem with ESG is it's going to take years for this
But,
for this.
but when you hear J.P. Morgan yesterday say they're not going to finance fossil fuels, or you hear Ed Bastian at Delta say he's going to spend $100 million of real money, by the way, effectively buying carbon offsets and investing in new biofuels every year, you say...
Two things. J.P. Morgan, by saying what they said, will be able to borrow billions of dollars from the ECB at negative rates.
You think that's what that is?
It's obviously what it is. It doesn't have to work. They don't need to do anything. They are now getting free money from Europe for basically being able to say this.
And you don't think they would get that money otherwise?
No, because Europe basically has this condition where you can issue green bonds and you have all of this, checks and balances.
Okay.
So that's one thing.
Okay.
It's going to be very important for you to really be able to diligence the supply chain all the way down to the supplier and the supplier.
So when
supplier.
You Microsoft
That's
to
a
say
very
they're
hard
going to do,
thing.
for example.
These are useful statements. It's great marketing, but again, it's a lot of sizzle, no steak. I think that what we need to do is invest in actual companies that can go and count,
right,
and can go and legitimize the actual impact that companies have, so that you can do the right amount of carbon offsets. Right. Wow. And then you have to have a legitimate exchange where you can actually trade them. So if you really believe in climate change, you got to do some hard work now.
Okay. By the way, Virgin Galactic is going to be throwing off a lot of carbon. Do you buy offsets?
Galactica.
Galactic.
Yeah, we have a plan to sort of get to sustainability.
You do? Why? If it's all...
It's important.
He believes
really
it. He just said he believes it. The other stuff was great. I need a cigarette, in fact, after that. It was so good for me. But tell me, what about crypto? Does that ever become an actual means of transacting?
Yeah.
It does still. I said crypto. Am I allowed to say crypto? I hope I'm allowed to say crypto. Can I bring it up?
I would really like Bloomberg to take this article that I wrote for them in 2013 out of their paywall, but basically, my view at the time, which I've held since today, haven't changed, is that everybody should probably have 1% of their assets in Bitcoin specifically.
Or crypto.
I still believe that today. And I think it is just a fantastic hedge. So if you go back to the conversation this morning, when you see the amount of leverage the financial industry is running, and you think about all these dislocations and all these exogenous things that are happening that you can't predict, there's a lot of risk to the downside. And it would be great that an average individual citizen of any country in the world has an uncorrelated hedge. And I've said this repeatedly ad nauseum on this show. Every financial instrument is correlated.
But Buffett,
it's all fake, except Bitcoin,
but Chamath,
which is fundamentally
an uncorrelated hedge that Warren Buffett says has zero value, zero inherent value, unless someone pays more for it.
I think he's an exceptional person. I've learned an enormous amount, both from afar and the few interactions I've had with him. He is completely wrong and outdated on this.
Shouldn't the price have gone up during this coronavirus situation?
Haven.
It went down.
Like gold. If it was really digital gold.
I think that you have to look more at volumes. These are not necessarily event-driven strategies, meaning you don't want to...
You just called it digital gold.
No, he didn't.
I didn't say that.
No, he didn't.
That's
what people say.
I don't think I don't think when you wake up and you see a coronavirus scare and the Dow down 2,000, you should not be going in and buying Bitcoin. That is an idiotic strategy. I think a reasonable strategy is to say 1% of my net worth should be in something that is completely uncorrelated to the world and how the world works. You quietly and quick, over some number of time, accumulate a position, and then you just never look at it again. And hope that insurance under the mattress never has to come due.
Right.
But if it does, it will protect you, because then that thing will be hundreds of thousands or $1 million a coin.
Okay, and then we got to go. But FANG stocks, do you like them or hate them?
I'm a net seller.
You're a net seller of tech companies right now?
Other than Amazon.
Because?
I think Facebook gets regulated. I think Google will have to go through a bunch of divestitures to avoid regulation. I think Netflix has turned into a consumer surplus business, and their viability to cash flow is de minimis. And Amazon just keeps growing by 25% every year like clockwork. It's an incredible, incredible business.
Okay. Thank you, Chamath. Appreciate that.
Thanks, guys.